Hey, good evening, traders. This is Jeff from Zen Trader, and this is the market update for what is this? Wednesday, the 13th. So this has been a pretty strange and crazy week. Monday, we had a big down day, and I got long in a pretty big way. In fact, I was at the longest exposure I think I had been all year. And what was interesting, how this whole week has played out, is yesterday, when the markets didn't bounce, I actually threw on a hedge. And fortunately, part of yesterday, there was a little bit of an intraday rally where I was actually able to take some profits on some of those positions that I opened at the end of the day on Monday. And then the same thing happened today, that I was able to exit some of my positions. So now I actually have a 2-to-1 with those shorts I put on. I actually have twice as many shorts now, dollar-wise, than I do the remaining longs that I have. So it's kind of interesting how I've allowed the market and my individual stops to get taken out, or targets, because the majority, I think I've only sold one of those stocks for a loss. I think one of them was even, and then the rest of them were profits. And then out of the couple that I still have, two losses, 2 gains, but my shorts are gaining after hours on the Moody's potential debt news and whatever. So it's really interesting. My timing signal is close to crossing, but it's not. It could tomorrow, depending on the severity of the sell-off. But this market doesn't look good. It should not. I thought it should have bounced hard yesterday, and it didn't. And then it bounced today, and it wasn't able to maintain these levels. As you can see, we found resistance around the 60 level. That's not a good sign. Same thing on the NASDAQ. These charts look rather identical. I'm sorry, on the Dow. The inability of the markets to be able to not hold these levels after such a strong rally, you would have thought that the momentum would have at least carried it back up to previous highs, where probably, at least that would have been a logical place for it to stall. But this kind of action is indicative of a really weak market. So I would be very defensive. This is the Toronto Stock Exchange. I got a major sell signal here. Early June, we had a nice sell-off, and then we rallied right up almost to where my previous sell signal is, and it looks like I could be getting another sell signal on the Toronto Stock Exchange, maybe towards the end of the week, maybe next week, but it would be another major sell signal, where essentially if one got short here, then that would be an area where you could add to that position. So that's what I'm looking at in the Toronto. You would have thought that the Toronto Stock Exchange would have rallied more with the action in gold and especially silver today. Well, gold hitting new highs and silver just having a phenomenal day, but not even that could cause the Toronto Stock Exchange to rally. So there are some cause for concerns there. This is interesting. This is the equity put call. You can see here we are, we do have an area here where this chart, this is the 10-day moving average. I actually have removed the actual put call because this is a little bit smoother. So it's interesting that we do have an upward sloping line of support here. Sorry, I think I said resistance earlier. And so we went up to this really this area where there were a lot of high put buying, and we may be heading up to here if this market starts to see, if these macroeconomic news, the debt, the stuff in Europe, could cause some more panic selling. So that's something to be on the lookout for. So with that said, I've got a couple more charts, but I'll put them on the blog post. My timing signal is close to turning bearish, but I still have a few remaining longs that I'm holding. I'm waiting for the market to either give me a sell signal or for my individual stops to get taken out. So with that said, be careful out there, guys.